Welcome to today's webinar, courtesy of the Kentucky Small Business Development Center in Louisville. Discover no-cost, valuable business services to help you thrive, whether starting your entrepreneurial journey or scaling your existing business. We have the resources and expertise to help you succeed. For more information, please visit our website or text 502-977-5800. Thank you for joining us today. Feel free to use the chat feature to ask questions or engage with our speaker. Let's get started.
Hello, friends. Welcome to another session of the Kentucky Small Business Development Center's Toolkit Tuesday. We're glad you're here. It's another great Tuesday here in Louisville, Kentucky. And as always, I'm joined with my good friend and coworker, Janet Flaw. Janet, how are you today?
Hi, Dave. Good afternoon. Doing well. How are you today?
Doing great. It's a balmy 30 degrees today, so it's ready to get the shorts out, I guess. Anyway, see everybody kind of popping in here. So as we allow our attendees a few moments to join our event, I'd like to talk a little bit more about the SBDC program. We are the only statewide nationally accredited program that provides entrepreneurial and business development services. We play a big role in the state of Kentucky's economic development by assisting entrepreneurs at every stage of their business life cycle. For almost 40 years, the Kentucky SBDC has assisted emerging and growing businesses by providing the professional expertise, tools, and information necessary to make sound business decisions in a complex and ever-changing marketplace. We do this at no cost to our clients, thanks to the U.S. Small Business Administration, the SBA, who sponsors our program, also the University of Kentucky and Greater Louisville, Inc., the Chamber of Commerce here in Louisville, and other organizations that sponsor us. So today, as always, just to make sure that you guys can hear and see me, if you look at the bottom of your screen, you should see that toolbar down there. And if you don't, just kind of hover over, it should pop right up. And there you'll see the little chat button. Click on that for me. And then if you wouldn't mind just saying hello and that tell me your name and where you're joining from. It's always fun for me to see where everybody's kind of popping in from. I'm here in Louisville, Kentucky, high atop the SBDC Tower on the corner of 5th and Main on the 23rd floor in the SBDC studios here. So just make sure that somebody's out there. I know that I can see you guys popping in. So just say hello. There's Teresa from Lexington. Hi, Teresa. Hoy, also from Louisville. Chanson in Louisville. Good. Thanks for joining us. Hi, Kelly. Brandy. Everybody's from Louisville today. All right. Megan Somerset also with Truist. Good to see you. There you go. Sienna from Lexington. Yeah, not too far. Sometimes we usually get somebody from California or some faraway place, but everybody's kind of tight in here, Well, anyway, whether you're starting your business or you're growing your business, the engine that drives that is capital, is money. And if you're starting, you need money to buy the things you need to generate sales. And if you're an existing business and you want to grow your business, sales cost money, and you might have to finance that growth. So we've invited some of our great friends from Truist Bank to come and help us understand the steps necessary to really have an easier path into going through the loan process. And that's one of the things that we do very well here at the Small Business Development Center is we help you put that loan package together with some financial projections and things. So when you go to the bank and you go talk to these people, the bankers, you have an easier time with it. But we do have real bankers here today, and they are all experts in their field. And so please, any questions you have or comments, just put them in the chat. We'll be watching that. And here's a good opportunity to get your specific answers to specific questions that you have in your specific case. So don't be shy. So we got three great bankers. We got Megan, James, and Natisha here. I think Megan's going to pop on first, right? Megan, you want to jump on here? There you are.
Good morning or good afternoon, David. Can you hear me okay?
Yeah.
All right, good deal. Well, thank you again for allowing us to be here. Again, my name is Megan Dameron, and I'm a small business team leader here with Truist. So I lead a team of teammates who do just that. They provide funding to our small businesses in our footprint. So very quickly, I'm going to ask Natasha and James if they would introduce themselves as well. I would appreciate that, Natasha.
I'm sorry, I was trying to come off of mute. Hello, everyone, and thank you for joining us today. I am Natasha Horton. I am the Community Development Manager here at Truist in the Maryland region. And for a number of years, I was a commercial banker. So everything that you're going to talk about today, I've lived as well as helped other businesses thrive. So thank you for having me on this call today.
Thanks, Natasha. James?
Hello, James Chatfield, and I'm the Community Development Manager in sunny South Carolina for the bank. So, similar role to Natasha in the previous life. Also worked with small businesses, so very honored to be with you all this morning.
Wonderful. Thanks, James. I'm going to go ahead and hop right into the presentation. Let me go ahead and share my screen.
All right.
David, am I good? Am I good to move forward?
Yes, go right ahead.
All right, good deal. Let's see here. Okay.
All
Can y'all
right.
see that?
Your slides, you're getting your other screen.
Okay. All right. Let me stop back. Sorry, guys. Technical difficulties. I'm coming.
Yeah. Yeah. So, folks, you have questions, or comments on anything to do with banking or acquiring capital? This is a great opportunity to really talk to some folks that understand and work with small businesses all the time. Looking good there, Megan.
All right. Good deal. Sorry for that. So yeah, we're really, really happy to have everybody in this session today. As David mentioned, oftentimes you can't grow a business without capital and without money, and that's exactly what we're going to talk about today. So again, thank you for having us. Truist, which we've got several locations here in Kentucky. It looks like everybody is in Kentucky, so we have several locations throughout Kentucky. But Truist is a purpose-driven organization. It's our purpose to inspire and build better lives and communities. And by participating with you all today, we do just that. We understand that small businesses are the backbone of our communities and, quite frankly, of the economy. So we are committed to helping our small business owners succeed at every stage of their business, helping them identify what stage of the business they're in. Again, whether that's through products and services that we offer, or just simply by advice and expertise. There's a lot of knowledge among our bankers at Truist, and specifically here in Kentucky. I've been in business banking or business lending, or however you want to look at that, for 21 years here with Truist. And interestingly, I bring another perspective to conversation because my husband is a small business owner as well. So I see the things that he lives through. I know the things that you live through, or I anticipate or have a pretty good feel for the things that you deal with on a daily basis, specifically when it comes to growing your business and financing such growth. So again, by partnering together, we can make our communities stronger and we can make our economies even stronger. So again, we appreciate you all being here, and we hope that you can get something out of this presentation, some ideas, tools, contacts, various things to help you and your business be successful. Well, for some reason it's not letting me advance slides. Oh, there we go. So again, there is some material that I know will be circulated after the presentation. There's some workbooks and things that you can use. I don't think you have access to that today, but we're just going to have a high-level discussion, and you can utilize the workbook going forward if there's something that you'd like to explore a little bit more. So on today's agenda, we're going to explore small business borrowing. So as you think about ways to fund your business and what your needs are, again, we're going to review financing options and the borrowing process to help you get what you need as far as funding to grow your business. So there's 7 sections. And we're going to start with why your business needs funds, right? Then we're going to take a look at where to find the funding, how to select the right type of financing. Oftentimes clients come and they don't know it, they know they need money, right? But they don't know exactly what types of loans and lines of credit and that we offer, and quite frankly, don't know what they need. So your bank can help you through that, but it's a good idea to have a general idea of what you're going to be looking for. And then we'll help you determine, okay, what are lenders looking for? What are we looking for when you come ask for a loan? What are some key things that we're going to need from you? What are we looking for when we are trying to get approval for your loan, et cetera? We'll talk about the process, the borrowing process, how to create your business borrowing profile, which I know the SBDC can also help with. They're a tremendous partner. And then finally, next steps, what happens after the financing decision? So just a couple things to get started. Again, we have the chat feature, which is where we'll have some dialogue. Welcome to virtual land. We'll have some dialogue in there. I've got some questions. If you're comfortable, please drop your answers in the chat, and James and Natasha will help manage that and provide some information that comes through in the chat. But really, to make our time together here the most, get the most out of it that you're going to get. Ask questions, right? That will help us address the issues that you're having. And quite frankly, we hear this all the time. Likely somebody else has the same question, but just doesn't maybe have the confidence to ask it. So ask your questions in the chat. I'll pause at various points throughout the presentation to see what information's come in the chat, anything that we need to address, because again, I want to talk about things that you guys want to hear about. What challenges are you facing that we can help you with? And then again, just making sure that we're participating. Again, with the chat, it's a little different than if we were in person, but we certainly have the opportunity to do that virtually. So, all right. Whoops, I went a little far. Sorry. Okay, to start off, somebody drop in the chat some of this information. You can maybe see it on the screen if you have access to the screen. What's the name of your company? What do you do? Maybe how long have you been in business? And do you have a specific goal for joining today's session? Like maybe you're wanting to acquire another business or a competitor, or you're developing a new product and you're trying to find out how you can fund that. So if you wouldn't mind, just drop your name, company name, just a brief explanation of what you do, how long you've been in business, etc. And I'll pause while you all are doing that. Another thing that, is really fun to know about businesses is when you got started, what were you most passionate about, and has that passion changed as maybe you've been in business for a while? So I think back to my husband's business, and it's around, his business is around the boat industry, and he's very passionate about boats, right? And he saw a need to help people improve their boat, maybe make some changes without having to replace it, and do some customization. So he was very passionate about that and took it into a business. James and Natasha, do we have anything in the chat?
Yes, we do. So we have Humankind Consulting LLC. We have Pressed Unique. Hopefully I said that correctly. Creations. This business creates custom dinner tray tables, t-shirts, tumblers, all things custom. I love that. You might need to put your email address or your phone number in there so I can order some things from you. Lay Richardson, 17 plus years as an HR professional. We have Heart Matters LLC, CPR training. I love that. And AHA certification, over 10 years. The chat is filling up. So we have a little bit of everything. We have an engineering company that purchased a franchise this year, Young Stars Performance Academy, and then we also have Hearts Matter LLC. They're looking for capital for expansion.
Fantastic. Thank you. And thank you, everybody, for being vulnerable and putting information in there. It's really good to get an idea of who we're with today, even though we cannot see you. So, again, hopefully that you all get something out of this today. If nothing, you're going to get some contacts in the industry. So we're really, really excited to be here with you. So thank you again for sharing and participating. We talked about passion, right? It takes passion to have a business. It takes a lot of grit, strength, and there's lots of tears and sweat that are also that come about with a small business owner. I certainly know that. So again, thank you all for being here and for providing us some feedback through the chat. But we'll move on through this question. I know you all have a lot of passions, and you're welcome to drop those in the chat as we continue through the presentation. So let's get started into the first part of our agenda: why businesses need funds, right? And I'm sure you're thinking, well, there's a lot of reasons why they might need funds, and you may have some specific ones yourself, but again, it's important to understand what business outcome do you want, right? So there are 4 common outcomes that lead people to seek financing. Some businesses are looking to grow and drive sales, right? They may need funds to open a new location or maybe to launch a new product, like I mentioned before. Another reason a business might be seeking funds is to increase production or sales capabilities. So expansion. It can mean add new equipment, upgrade technology. Maybe you need to hire some new people and train some additional staff. Again, sometimes you might need to replace some vehicles or things along those lines, but to increase production and service capabilities. A third reason would be to boost profits, right? You've heard this old saying that it takes money to make money. So you might have invested in a new e-commerce or online site that will lower your cost of sales, or maybe you're going to take advantage of a volume discount provided by a supplier. And so there's some ways that we can help provide funding to boost productivity and to lower costs. And those are some potential options there. And then finally, you may need funds to manage the capital in your business. You might need to borrow to consolidate debt or to buy inventory for your busy season. Very legit reasons as to why people seek financing from financial institutions. Or maybe, you need to fund a one-time or unplanned expense. Again, there could be other reasons for borrowing, but these are the primary reasons that we see that clients need some capital and come to the bank. So I'm curious to know, just drop in the chat, what's some of the outcomes your business is interested in pursuing? So are you trying to grow sales? Are you needing to increase production? Drop a couple things in the chat that that's specific to your business, or maybe you don't have a need right now, but you anticipate something down the road, like you want to acquire a competitor. We talked about that with one of my teammates today. He's got a client that's been growing organically, but they want to continue to grow. They may need to grow with an acquisition. So I'm going to pause and let you all drop in the chat, again, some outcomes that you're interested in or that you suspect that down the road might be something that you might need to seek funding for.
In the
Another
chat.
question is, go ahead.
Oh,
I'm sorry.
sorry, Megan. It's James. I was just saying the chat is already active and filling up, but I didn't mean to cut
Oh,
you off.
perfect. Go right ahead.
All right. So we have Brianna. She said she's looking to grow business to expand services. Toy says, I would like to purchase new equipment to drive sales and keep all money in the house. I like that. Kelly says number 2 and number 4. So looking to increase production or service capabilities and manage cash engaged. in the business. A Chanson, and I apologize if I'm mispronouncing that, says to manage cash.
Absolutely. Sometimes we don't need, we can't, our cash is set aside for something else, right? So oftentimes we need some supplement to provide growth, or maybe even it's just short-term working capital need. You always have the option to fund some of those things through cash, right? But sometimes we really need to keep the cash in our accounts for various reasons. We've got some upcoming things that we need to preserve that for. So that those are certainly all real business outcomes that you're seeking. So thank you all for sharing those examples. Anything else, James, in the chat, or am I good to move on?
Yes, ma'am. We do have a couple of others. We have D, who says growing business sales and managing cash. And Teresa says an expanded a new location, excuse me, by purchasing and renovating a historic building in Michigan. That's exciting, but ran into unexpected construction costs.
Yes, that construction overruns and costs, especially when you're dealing with an older property, are real. and they can be difficult to overcome. So that's absolutely another reason why you might need some funding. Okay, so we're going to go into the next step. We talked about why we need funding. So where do you find funding? Where do you find what you need? So start by making sure that you're using the funds you already have, right, to the degree that you can. We want you to have business cash reserves. Think about, from your personal banking side, you always want to set money aside in your savings, right? Pay yourself first. So again, we have the same situation from a business perspective. We want to have some cash reserves in these cases where you do need to outlay some money of the business for growth. But there's no additional cost and no loss of profits or ownerships when you use your own money first, right? When you come to the bank, we're going to charge you for letting you use our money. If you go to a non-traditional lender, like a community partner, they may request ownership in the company, for example. So not a lot of businesses have substantial reserves built up, especially new ones, right? But if you do, they're a great resource. But again, as you all mentioned, just be cautious not to use up all of your reserves. Because you may need them, and several of you mentioned that you want to keep some more money in the bank, thus looking for some financing. So the next, so we talked about business cash reserves as a way to get some funding. Another one is through the use of equity. Equity owners get a share of the profits from the company, which is essentially what I mentioned. If you've got a community development or a community financial partner that you're working with, they may require some of the profits of the company or ownership of the company. Typically, there's not there may be a scheduled payment schedule, but in some cases, they're just being repaid from the future profits. Or maybe if you sell the company someday. You can sometimes find equity faster sometimes than you can going through a borrowing process, but you have to understand who to go to find that equity. And the SBDC is a great resource to help you find potential equity owners and partners. Oftentimes owners put their own personal funds in the business as equity to cover cash needs, right? And I'm sure a lot of you have done that as well. So if you're a sole owner, ownership doesn't change, of course, when you invest, and the business gets the cash that it needs when you're putting your own money in. But be careful not to overextend your personal funds. Just like we talked about from a business standpoint, we don't want you to liquidate all of your personal funds for use of the business. Again, there's external equity sources that might require you to give up some of the ownership. Investors, think about them as investors. And they would expect a return on the equity that they've put in your business. And the other way is to borrow. You can borrow the funds through the bank or through Another type of financial, another financial source. So in this case, if you come to the bank is not going to take a percentage of ownership of your company, right? So you have total control of the profits, of how the business is run, et cetera. And borrowing might be a lower cost source of funds. Might be, depends on what you're seeking. Your business, of course, will have to think about your car payment, right? You'll have to make regular payments. And if you cannot, your business and your personal assets may be at risk if you do not pay them. So it is harder for brand new businesses to get a bank loan. I'm sure some of you experience that because you don't have the history built up that the bank is looking for. So again, there's other financial partners, and the SBDC is a great resource. I cannot, they're wonderful partners to the financial industry, and they might be able to have some other sources. If you're brand new, you're just starting up, get with one of the partners there, and they can, may be able to have some options for you. But it is often difficult for brand new startup businesses to get a bank loan because the banks look historically. We look at what you've done in the past, not necessarily what you're going to do in the future, which is often what an entrepreneur is looking at when they do a startup. Real quick, James or Natasha, any questions in the chat?
No, ma'am. No questions in the chat. You're good to go.
All right, good deal. So, I just gave you a whole lot of information. I'm really, really sorry. It's probably a lot to digest. So let's talk about where you are in your businesses. Again, you don't have to, provide any exact information, although this is a confidential setting, but I understand we don't want to, sometimes we don't want to reveal too much, but which of these three, or maybe you can even just think about this, which of these three would you use to find funding? Either cash reserves, equity, or debt. So think about that. Why? And what have you used to date? If you all can just plop in the chat, what is your experience with borrowing to date? And how did you do that? Did you use your cash? Did you have equity? Which, remember, equity can be your own equity. I'm investing my own money into this business. Or maybe I went out and sought an investor who put money in. And that can be, a family member. Talking with a client yesterday, and his aunt invested in his company. And now he's ready to pay her back or buy her out because she does have a little bit of ownership. So somebody provide some information in the chat about how you have financed your business so far. And by the way, there's no wrong or right answer. These are all three very legitimate ways that people fund their businesses. Again, through cash reserves, through equity, whether it's your own or someone else's, and then through debt, which is typically a bank or another financial lending institution.
So Brianna says, Megan, that she's funded with cash reserves or personal money invested.
Yep.
Raleigh says with personal money invested. D. Spencer also says personal money. Kelly says with personal loans. Toy says, I have fully funded my business for 7 years. Congratulations. Custom orders are prepaid. I use the money to purchase items needed for orders, most times in bulk for cheaper prices.
Fantastic. So I've heard people using almost or all three, but I think I may have even heard one person that is using all three, which is, cash reserves, you put your own money in, and then you've also gotten some loans. So absolutely, those are all great information, and kudos to those who are, continuing to grow their business without having to make any investments. So that's not very easy to do. So congratulations. Congratulations on that. So again, let's dig into some types of financing, and we're going to start with debt. So the first is a business credit card. It is one of the easiest types of credit for a business to get. Why? Because number one, there's credit card companies are like a dime a dozen, right? Think about, personal credit cards. So a lot of it's going to rely on what's your personal financial strength look like? What's your personal credit score? If your personal credit score is good and you're running the business, chances are that they're going to get repaid. So business credit cards are often the easiest type of credit to get for businesses to get. They're great for everyday purchases, right? And most of them offer some sort of rewards for you that you can get a kickback for your business. So again, you have a set limit. You only have to pay interest on those balances, and those balances can resolve. Those balances can revolve. But I caution you because that's the way you build a bunch of debt within the business. And eventually you may have to refinance that because credit cards typically have higher interest rates associated with them. There's more risk. They're unsecured. There's no collateral. So again, they're typically priced a little bit higher than your traditional, equipment loan or inventory loan, etc. So credit card is one option. Next is a business loan. Again, these are perfect for one-time need. You need to buy a piece of equipment. So we go out, we get a term loan for 5 years. You make regular payments of principal and interest. It's typically a fixed rate. Business loans can be secured or unsecured. And again, it depends on the value of the asset that you're willing to pledge to the lender, which helps determine how much of a loan you can get. But that also says that the bank is going to come after that asset if you should not pay. So the next one is a business line of credit. And I find that a lot of small businesses think they need a line of credit, but they really need a business loan. So I like to think of a business loan as kind of a long-term need, right? Something that you're not going to pay off in a 12-month period. A business line of credit is think about like your home equity line, right? Although you don't have specific uses that typically you're required for a home equity line, but on a business line of credit, they're typically for short-term working capital needs. So let's say I can't remember who it was, but somebody has a business where they make custom things. They get money up front, right? They purchase the materials, they make the product. When they deliver it, they may get the rest of the order, the revenue from the order. So maybe you get 50% up front. Or maybe you get, let's say you get 20% up front, but the cost of those supplies is actually, larger than that 20%. So you may have a line of credit that you have to borrow on for a short term. So if you're making widgets, for example, and I've got to assemble my widget, so I've got to go to my supplier and purchase the items to assemble my widget, and I've got to pay those suppliers, but I haven't yet sold that widget and gotten the revenue from it. So that time frame between when you purchase the material to when you get paid is the working capital cycle. So it's for short term. There are long-term working capital, but this is short-term is typically what you would use on a line of credit. So once you've built the widget, when you sell the widget, you take that money and you pay back the line of credit and keep the profits for your pocket. So again, I think of a business line of credit is use for something that is short-term, less than 12 months. You're only gonna need it for less than 12 months, and in fact, it's probably even less than that, right? I would hope that your cash outlay, the time between you outlay the cash and that you receive the cash for the product, hopefully that's less than 12 months. Some cases it may not be. But just that's kind of the difference between a business loan, again, thinking kind of like a long-term need versus a business line of credit, which is typically short-term. Payments on the line of credit often are interest only based on the amount that you have drawn. And again, with the anticipation that once you get paid for those widgets that you just sold, you would pay back the line of credit. Lines of credit, some of them are secure, some of them are unsecured. It just depends. We customize our lending options to a particular business. and what is best for that particular business. So I'm going to mention 3 other types. Business leases, again, it's, think about leasing a car versus buying a car. So you may not, you may have an option to purchase it at the end, but you're basically renting it, if you will, renting that particular product. Leases definitely have their place. There's some tax advantages and things like that. So you would want to consult your CPA on that. Construction loans let you draw down the funds for a project. And then when it's completed, then it converts to a mortgage. And you would make regular principal and interest payments on that until it was paid off. Another type of loan is an SBA loan. SBA loans are backed by the Small Business Administration. They can provide some financing for borrowers who may be newer. Maybe it's a little bit riskier of a deal that the bank doesn't feel quite as confident in taking the leap of faith on their own. So we may seek an SBA guarantee to help provide some strength to some of those loans. Other things that SBA loans can do for you, they allow a longer term of financing. So for example, where the bank may only go 15 or 20 years on a piece of real estate, the SBA can stretch that out to 25 years. Maybe the bank will only go 5 years on a piece of equipment, but the SBA may go 7 or 10. So it gives you a little bit more flexibility with your cash flow because it allows you to stretch out the term of that loan for a longer period of time. So your payments are less each month. So you can keep more of that money in your pocket to operate the business. Cool. That was a lot. We talked about quite a few things. Does anybody have any questions about the different types of financing available?
Megan, I don't see any comments currently.
All right, good deal. We will move on. So, there's a variety of other funding sources to provide debt or equity. We talked about some of those already, but again, you can secure equity investments from family or friends. Typically, these are common for startups. Another thing is angel investors. I don't know if anybody's ever heard of an angel investor, but they're often for early stage companies, like venture capitalists or things like that. So basically, they take a little bit more risk than the bank would. Again, angel investors. There's several angel investor companies across the state. So if that's something that is you want to learn more about, possibly the SBDC can put you in contact with some angel investors as well. Other options are private equity firms, which in most cases those are for much larger deals, but they can provide funds in return for ownership, as we talked about, or potentially a share of the profits. One thing I caution you is equity investors can definitely have a good place and they can do wonderful things for you. But I also want to remind you that equity investors may be with you for a long time. They may be part of your business for a long time. Whereas when you're going to pay off a loan, you may not have that clarity with investors. So just wanted to, just everything has the pros and cons. So just be aware of that. I mentioned CDFIs, Community Development Financial Institutions, and they serve community businesses and can also do some small business lending. Again, SBDC is a great resource for that. Again, there's some online lenders that target companies that might have a harder time borrowing. For example, if you use QuickBooks, I know QuickBooks often offers loans. If you use Square as a point of sale, sometimes those point of sale and credit card merchant companies will offer some sort of financing. Typically, these come with a much higher percentage rate, but they can make fast decisions. Sometimes they're a little bit more lenient when it comes to credit rating, but as I mentioned, they usually have higher rates. So I like to use the phrase that sometimes access to capital is more important than the cost of it. So if you've got to have money to purchase this piece of equipment that you need to operate your business, you need it, right? So getting the money is often takes precedent to what the cost is. So in case sometimes online lenders can be beneficial. You also can seek financing through your particular vendor, who might be providing that equipment. There's also some things, these are kind of new lending options or funding options, peer-to-peer lending sites. Honestly, I'll be honest with you, these are very new to me. I don't have any experience with them, but there's some things called Funding Circle or Circle Up. Again, they can maybe provide some options for industries or clients that might be harder to lend to. Again, there's no support or no advice. When you come to Truist to apply for a loan, we're going to be consultative with you. We're here to help you grow and provide some strategic planning and strategic advice. Can't say that you're going to get that from these peer-to-peer lenders or maybe even online lenders. And then crowdfunding, this is brand new to me. They, again, looking for businesses that have breakthrough products or services. If you've got a really, really, really cool idea, a product, a brand new product that you're wanting to launch, you may need some swanky marketing campaign, right? Maybe a social media presence, and that can help you get access to some of these funds. Once again, I covered a whole lot in that slide. What questions do you all have? Anything in the chat?
No, ma'am. It does not look like we have anything in the chat at present.
All right, Natasha, James, anything that I've missed that we need to make sure that we hit on?
No, I think you've covered everything thus far.
Okay, good deal. Well, we'll keep scrolling on through. I know there's a lot of information here, so 60 minutes runs really quick. So if I'm talking too fast or talking fast, that's why. So again, we mentioned this just digs in a little bit into the other funding sources. Again, family and friends, equity investors and CDFIs. Just gives a little bit more information in digging into those options and how one might be a little bit better than another. Just some pros and cons. And then again, here's some details on the online options. I'm gonna call these new lending options because they're kind of new as we've entered the digital world. I'd say that most businesses didn't have access to online lenders and peer-to-peer lending sites 20 years ago. So with the technology age, we've brought some new options to you. So
yeah, and
okay,
Megan, hi. This is this is Marlo. On the online lenders, I would caution the reputability of some of the online lenders. So just research any of the online lending platforms and make sure that you're doing your due diligence and selecting one that is reputable. There are some out there that charge extremely high fees and interest rates. So just be aware of that when you're in the online space. It can, it's kind of the wild, wild west out there. And to do your due diligence and make sure that you're selecting, a reputable company if that's the option you go.
Perfect. Thank you, Marlo. And thank you for joining. You're exactly right. There's a lot of companies out there that are not reputable. They're on the internet, and a lot of keyboard warriors out there. So just be very, very careful. We certainly don't want you to fall into a trap that's difficult to get out of. So as we think about some of these funding sources, and I'm going to scroll back up, family and friends, we've got investors, we've got CDFIs, that can provide some lending, some online lenders, etc. What funding sources or lending products do you think your business may need in the future, or maybe you need now? Drop some ideas in the chat of maybe some places you have attempted to get financing, or that you have gotten financing, or how might you in the future, any of these particular items that you would seek for funding your business. While we're waiting for some folks, I'll tell you with my husband's particular business, the first type of financing they needed was for a piece of equipment that they really needed to make their business run smoother and to improve efficiencies. And I say we because I live it with him every day, but they leased a piece of equipment, and it's a hard piece of equipment, a true asset, but there's also software that has to be uploaded. So what happened is when they made their payment each month, then they got the software uploaded and pushed to them. The other company had the option to cancel the software, for lack of better words, if they did not pay. It was almost like a lease because they were solely dependent on making sure their payments were made so that they could continue to use the equipment. But at the end of that lease, they owned it. So very untraditional, right? Not a traditional bank loan, but that's what they needed to have to get going because they were a new business. So getting creative is part of financing in the early stages of your business. James, Natasha, is there anything in the chat?
Nothing outside of Toy. Oh, something just came in. Toy says she would love a DTF printer and a vinyl printer. And Dee mentioned she's looking to get a food truck and need help. And what's the best company to work with and financially? So I'm assuming she's asking what's the best company to work with in addition financially or financing. Dee, hopefully I'm reading your response correctly.
So I'm gonna start with the first one that printers. I think was it a 3D printer or a digital printer? You might you can certainly discuss that with a bank. At Truist, we'd be happy to take a look at that for you. Another option, as I explained with my husband's business, going to the manufacturer, seeing if they have any options for you to get funding through them. They may. A lot of times, companies are offering a very low percentage rate, right, to try to push their product and to get you to use their equipment. So they may have a low cost option. There's lease companies out there that you may be able to use. A lot of times the vendors will have some contact information or some contacts that they can put you in touch with. But you're also always welcome to come visit a local Truist or one of the another bank in your area to see what they might be able to do for you. The next question was the food truck. I'll be honest with you, I've not had any experience financing food trucks, but I think it would just be just like any other business, right? You've got to purchase the truck, right? You've got to upfit the truck, almost like it's a construction loan, right? Because you've got to purchase it, you've got to put the equipment inside of it that you need to run the business with. So very similar. Again, the SBDC can be a great resource for any of you to bounce ideas off of. And I've got this idea. What do you think about this? They can take a look at financials. Their consultants have a pretty good feel for what banks are looking for. They may refer you to a CDFI. And you know what? It doesn't hurt to check with a couple different places just to see what options might be there. I challenge and I caution you from applying, actually submitting an application to multiple sources at one time, because they all will check your credit, and you will all see a personal credit inquiry, which can reduce your score, especially if you're doing multiples at a time. You probably all know that from a personal banking or personal borrowing perspective as well. Great ideas. Anything else in the chat?
Yes, ma'am. So, Chanson says, I need pianos and keyboards. A lot of teens and adults quit lessons and don't use their keyboards. and says I could take donated pianos. Purchasing new would be ideal, but decent Yamahas or Casios start at $100 per.
Yeah.
I've had a few people donate pianos to my business in the past, but in order to grow, I need at least 10. Right now, I have 3.
Okay. Another option might be, like I mentioned, if you mentioned getting some used pieces of equipment. I don't know if there's and you likely have an idea if there's a site that sells used instruments. That might be an option if you're looking for new. Maybe the particular vendor or manufacturer has some financing options. Another option might be sometimes they offer, zero interest credit cards. We talked about credit cards. Sometimes that can be a good way to fund some of those purchases. Again, if you think you might be able to pay it off within that interest only period, Truist offers those as well. So again, several options available to you. Just got to explore what some of those might be. I do like the idea you mentioned of seeking people to donate some of those to you, especially. I know I played piano for a long time, played some other instruments too. I didn't play them for very long, and I'm sure those instruments just sat in my room growing up. So there might be some more options. Maybe there's a Facebook or some sort of social media group that you could connect with for used equipment. So, all right, in the sake of time, I'm going to move on. Let's see. We talked a little bit about this. What the funding? That's what we just talked about. What funding sources do you think you might need for your business? So let's move into 4 of 7. So this one is what do lenders look for? What does the bank look for when you apply for a loan? So if you want the best chance of getting the funds that you need for the business, come prepared, right? Come prepared to seek financing with a well thought out business case. You know what you need and what you want. How is that going to impact your sales? If you do have 10 more keyboards, for example, how is that going to impact your sales? Well, you would certainly expect that it would increase, right? Because you're going to have more equipment available for the lessons or however you're going to deploy that. And again, making sure you come with the necessary documentation. So what you want to do is start by knowing exactly what lenders are looking for from loan applicants, right? And it often boils down to, well, not often, it does boil down to what we call here in the banking world, the 5 C's of credit. So what's your personal credit history? What's your capacity, right? So can you repay that? Do you have the capacity to make that monthly payment back to the bank? What's your capital position? Do you have reserves? Do you have any cash sitting aside that you can use during a rainy day? Conditions. So maybe this is economic conditions, or is there something specific going on in your industry? The bank will look at that. And then what's the collateral that you're willing to pledge for the loan? So the 5 C's of credit. So let's quickly take a look at each of these. I mentioned credit history. That also, we often refer to that as character within the banking world. So do you pay your personal payments on time? If you pay your personal payments on time, and I've mentioned this before, it's a pretty good likelihood that you're also going to make your business payments on time. Your business and your personal, how you manage your personal expenses gives the bank a really good indication of how you're going to manage the business expenses and debt. Capacity. So what are your current sales? Are they enough to support this loan that you're looking to get and making sure you can pay it off during the time that it's set to be paid off? Lenders will look at financial statements. We look at tax returns, bank account histories, anything that would give us evidence of the profits that your business needs to support the repayment of the loan. And then capital, talked about cash reserve. Do you have enough equity, or do you have enough for the down payment for whatever it is that you're looking to purchase? Sometimes we can do 100% loans, right? 100% of cost. Sometimes depends on the collateral, depends on what you're looking for. We may require that the business put in some money, just like you do on a home for a down payment. Can the business withstand a downturn, right? Lord knows we've had a lot of downturns in the last 5 years. Think about COVID. How many businesses were prepared for something? That's pretty hard to get prepared for that. But even on a smaller scale, how many businesses are prepared for, a blip in the road? You hit a bump in the road and you've got to figure out what you're going to do, how you're going to withstand that downturn. Business equity and personal net worth also provide capital strength. So again, it is important to kind of expect that you may need to put some money down on a loan. Maybe 20%, depends on, maybe a little bit less. 20% is typical. And again, the conditions. How are you going to use the loan? What's your business financial strength? Again, in the industry, knowing your industry is very important. So also knowing your need, how the financing is going to help you generate positive results. Do you have a backup plan? So again, understanding the conditions, the what ifs, if you will, of the business. And then last, C is collateral. What assets do you have, and what are you willing to provide to the bank or to the lender that they can use as collateral on the loan? Again, security is what the lender gets if you default. And if you cannot pay the loan back, then we've got the collateral tied to the loan and can repossess, for lack of better words. We think about that in personal terms, but we can use that collateral to repay the debt, resell it, etc. All right, so I'm going to move on. So we got the 5 C's of credit. That's what banks look for. A lot of funding agencies will also look at these things as well. So let's take a look at the borrowing process. I know we just have a few minutes left, so somebody keep me honest on time as we breeze through some of this information. But again, you'll get it you'll get the information after the session. So let's look at what happens as you apply for a loan. So there's 7 steps listed here. Sometimes it can be less, sometimes it can be more. So obviously we need to have proper identification. And you've decided you've needed a loan. You've identified what kind of loan you need. The bank may help you with that, but identify what it is that what's your goal for getting the loan and what is the best type of loan available. Then we fill out the application. And then, submitting any other documentation needed for the loan. So we talked about tax returns, financial history, P&L statements, bank statements, etc. Once we have all that, we move it to underwriting, which is where the credit decision is made. So we analyze the financials, we do a cash flow analysis to make sure that the business is generating enough profit to pay the debt or debts if they have multiple debts. So again, this is where we are evaluating the 5 C's, right? This is exactly where we're doing that in this area right here. Next is decision. And that is it approved or is it denied, right? Very simple, one or the other. At Truist, if it's approved, we move right on through the next stages. If it's a denial, we like to have a conversation of, okay, we cannot do the loan today. Where do you need to have your financials so that we can do the loan for you in the future? So we really take the next step to have some consultative conversation with you and really be that trusted advisor to help you get to the point where it's a yes. I personally hate giving no's and declines. So again, how can we make this a yes the next time? Then we move into processing, which is where we do all of the due diligence. We get our appraisals ordered if we're taking property. We get the purchase agreement if we're doing, an equipment loan or a vehicle loan. Get all those details together. And again, this can take a couple days, maybe even a week. If we're doing appraisals, we're relying on third parties to get that information back to us. So it may take a little bit of time to get those involved. Then we move to closing. It's where we sign the documents, just like you do on a personal loan, a mortgage loan. You receive the funds. You accept the terms. You've got your down payment ready. All of that happens at the closing. So you've signed your life away. Now it's time for you to repay the loan. So again, making sure that you have a clear attention to the payment schedule. Maybe set those payments up on auto draft if you're one that forgets to make payments. That's a good way to do that. And then again, as you're working on setting up your payments, make sure you include that in your budget. And as you're forecasting cash flow for the future, again, make sure that all is included in there. This next section is a business borrowing profile. So this is something that the SBDC does a really, really good job to help you with, and really looking at. And again, you'll get a copy of this. This is pretty small on my screen. My old eyes are having a hard time seeing it, but it's basically your resume for the business, right? It talks about the background information, who you are as the owner, what was your revenue. So it's really your bio for the business. That's exactly what this is. And again, the SBDC is a great resource to help you to complete some of this, so that you can bring it to the bank or bring it to whatever lender. All lenders are going to require this information. Some may require it to be in a little bit more detail, which at some point you can get to that. But this is a good starting point for you when you create the business borrowing profile. And then after we have our seventh process is what happens after the financing, right? What is the next step? Again, making sure that you have you've set aside that payment, you set it up on auto draft, whatever you need to do to make sure that you continue to make that payment on time to satisfy that debt. And then again, it's all good time to think about, okay, when I need another loan, what am I going to do, right? Now that you've got some of this under your belt, you want to, continue to build and keep your credit strong. So thinking forward thinking. Again, make sure that you're making your payments on time. Make sure that, you fix any, if the bank has helped you or you've identified some weaknesses within the business, look to see what you can do to improve those weaknesses. And again, at Truist, we really do try to take a advisory approach. So we want to help you through the business. We want you to be successful, especially if we've given you a loan, right? If you're not successful, we have a higher chance of having to take back that loan. So again, we want to work with you very, very closely to make sure that you continue to build the business and that it consistently generates profits. Anything we can do to help you do that, we certainly want to. Let's see. So in summary, here's a few key points that we can, kind of use to reference some things we've learned today. So borrowing should be driven by a meaningful business outcome. So you want to increase your sales, so you need a loan to purchase more keyboards, right? So again, borrowing should be driven by a meaningful outcome. Cash reserves, equity, and borrowing are the primary sources for business funding. You want to match your situation with your funding need. Again, the bank can help you with this, but we talked about short-term needs and long-term needs. What is the best financing solution for the particular need that you have? Make sure you match those up. And again, a bank or the SBDC or a CDFI can help you to do that if you're struggling a little bit there. Remember the 5 C's of credit. You've got credit history or character. How do you pay your personal debts? Because that's probably how you're going to pay your business debts. Capacity, capital, conditions, and collaterals. So again, understanding what lenders are looking for. We've also talked about understanding the borrowing process. And then I really think that borrowing profile, that 2-page document, again, you'll get a copy of this and it'll be in there. It'll help you sell and state your case, right? how can your business benefit from a loan? That is super important. Clients don't know that. They know they need a loan, but they're not exactly sure how it's going to benefit them. So if you can have a good understanding of that, you'll be a step ahead of a lot of borrowers. Again, all of these steps, all the things we talked about today will put you in the best position to get the funds that you need for your business, for whatever that outcome is that you're looking for. Okay, so we have reached the end of the session. It is 1:05. So I just wanted to, give you, again, thank you so much for taking the time to join us today. And as I mentioned at the beginning, at Truist, we want to help our business owners on their journey, because it is a journey, right? And we want to provide some kind of advice and solution in every interaction. Certainly hope that we have demonstrated that today, and know that we are here for you in the future. If you have any questions, certainly available to answer questions. You can, again, with the, coming up on the end of the session, that's information you can bounce off of. Anybody on this call, SBDC is a great resource, as I've mentioned several times. You'll also get a copy of this material. If you remember, on page 1, there was a QR code that also gives you access to a workbook that can walk you through a lot of these things as well. But again, remember, we care about you at Truist, and we care about your success, and we want to help you achieve your goals. So, David, I am going to stop sharing and turn the program back over to you. Thank you again.
This was really great. So I want to thank you, Megan, and James, and Marlo for showing up. I think you were out of town or something, but glad you're here. And Natasha, thanks for great hosting. So this has been very helpful for me even. One thing I'd like to just share with everyone, being a business owner, an entrepreneur, is not a solo endeavor. You have to build an ecosystem around you. And these people on this call is part of that ecosystem. Your bankers, your insurance companies, your attorneys, your CPAs, make sure you build a team around you. So hats off to you guys. Thank you for all you guys do for the community and for our small business owners. It's really fantastic. So thanks for being here. And everyone, we'll send you guys all the slides and recording, I think, in a day or so. So watch your email. And I know we're running over time, but Janet, thanks for driving the ship as always.
Thank you, Dave. We've got a evaluation for everyone to fill out, and also reminder, we'll be gone for 2 weeks. So we'll see everybody back in January.
Yeah. So happy holidays, everybody. And we will see you guys in January. Thanks, Megan. Thanks, James. Thanks, Marlo. Thanks, Natasha.
Have a great day. Bye.
See you next Tuesday, or in January. I'm sorry.